Breaking news. 10 major housing markets across the United States are on the verge of collapse. Experts warn that within the next few years, these areas could experience a sharp decline in property values, foreclosures, and economic turmoil. If you own property, are considering buying, or just want to understand what's really happening in the housing market, listen carefully, because what you're about to hear might change your perception of real estate in America forever. The first city on our list is Las Vegas, Nevada. This market is particularly vulnerable. Over the last decade, Las Vegas experienced a massive housing boom driven by tourism, low interest rates, and speculative buying. Developers flooded the market with new homes, and investors bought thousands of properties to rent out as short-term rentals, creating a housing bubble fueled by speculation rather than real demand. Now, water shortages threaten to turn this desert playground into a ghost town. Nevada's water crisis isn't just an environmental issue, it's a financial ticking time bomb. Las Vegas and Reno combined have nearly 2 million homes that rely on water from Lake Mead, which is already at record low levels. The Colorado River, the lifeline for the region, has dropped to historically unprecedented lows. According to experts, if water restrictions tighten further, or if Lake Mead continues to decline, hundreds of thousands of homes could lose their water supply, making them uninhabitable, or at the very least, drastically devalued. Real estate prices in these areas could fall by 40, 50, even 60% within the next few years. This isn't alarmist speculation. It's based on the data showing that water shortages have already begun affecting property prices. Now combine that with a rising mortgage rate environment and a sky-high level of debt. Homeowners in Nevada are already feeling the squeeze as mortgage payments increase. When water inevitably runs out, and if unemployment rises due to declining tourism or failed businesses, we could see a wave of foreclosures unlike anything seen since the 2008 crash. Moving east, Florida's housing market is also teetering on the edge of disaster. The state has seen a rapid increase in property values over the past decade, fueled by an influx of retirees, foreign investors, and climate refugees fleeing rising seas and hurricanes elsewhere. But beneath the surface, cracks are forming. Insurance premiums in Florida have skyrocketed, doubling or even tripling in some counties. Many insurers have pulled out entirely, leaving homeowners scrambling for coverage or facing the grim prospect of going uninsured. This insurance crisis is not just about a rise in premiums, it's about the potential wipeout of entire communities. When insurance companies withdraw, mortgage lenders often refuse to issue new loans or renew existing ones, essentially freezing the housing market. Property values in these areas will plummet as the cost of insuring a home becomes prohibitive. Lawsuits, climate-related damages, and increasing coastal flooding threaten to make many parts of Florida uninsurable within the next few years. And if that happens, complete neighborhoods might become ghost towns, with boarded-up homes and abandoned streets. Florida's market isn't the only one showing signs of stress. Arizona, once considered a desert paradise that boomed thanks to rapid migration and low taxes, is facing its own crisis. The water supply for the entire state is in peril. The Colorado River's flow has diminished significantly, and critical reservoirs like Lake Powell are at historic lows. Predictions suggest that within the next 5 years, water shortages could force farmers to fallow fields, cut off new developments, and dramatically reduce the water available for homes. If water becomes a scarce commodity, property prices in Phoenix and surrounding areas could decline sharply. Already, there are signs of stagnation, home prices plateauing or falling in some neighborhoods, precisely because water scarcity is starting to impact real estate fundamentals. Developers are hesitant to build new projects, and existing homeowners are cautious about investing in areas that are facing future water restrictions. Illinois is nearing its own fiscal disaster. Chicago and its suburbs have experienced years of mismanagement, pension crises, and population decline. The state's debt exceeds $200 billion, and the economic outlook remains grim. As taxes increase to cover fiscal shortfalls, housing affordability diminishes, and fewer people want to buy or rent. Cities like Chicago are already experiencing rising vacancy rates, and in the near future, we could see home prices falling by 20 or even 30% as the state's economic problems deepen. Beyond the Midwest, Alaska faces an entirely different crisis: climate change. Rising temperatures and melting permafrost threaten to destabilize infrastructure, increase insurance costs, and make entire communities unlivable. Anchorage, Fairbanks, and other towns are seeing real impacts from higher storm surges, coastal erosion, and increased maintenance costs. Property values could decline as climate instability makes living there more costly and less desirable. Coastal California, once the crown jewel of the U.S. real estate market, isn't immune either. As sea levels rise and wildfires become more frequent, many investors are starting to pull back. Insurance companies are reducing coverage for high-risk zones, which will soon make homes in these areas impossible or too expensive to insure. Already, some communities are experiencing rising vacancy rates, and in the long term, many properties could lose 30%, 40%, or even 50% of their value. Up north, New York and New Jersey are also showing signs of vulnerability. Rising sea levels and frequent storms threaten to inundate coastal properties, reducing their value. The influx of Wall Street money and corporate landlords has inflated prices for years, but with rising costs and climate risks, those prices could be wiped out within the next few years. Many small investors and homeowners are already feeling the pressure as property taxes rise and premiums increase. Now, what do all these markets have in common? They're all facing a convergence of crises: climate change, water scarcity, over-leveraging, corporate buying, and economic instability that could trigger a nationwide housing collapse as early as 2026. When you consider that Wall Street firms like Blackstone have bought up millions of properties across the country, often converting homes into rental units at higher costs, the risk is compounded. In many of these markets, investors are more interested in short-term gains than the long-term health of the housing ecosystem. And the danger isn't just local. These 10 markets are just a preview of what could happen across the country if trends continue. Once water shortages, insurance collapses, or job losses hit these hotspots, the domino effect could take down the entire national real estate market. Homeowners will see their equity evaporate, renters will be displaced, and banks will be forced to foreclose on millions of properties.